Broadcasting from beautiful, tropical Vero Beach, Florida, it's Money Nation with Ed Gardner.
Good morning and welcome to Money Nation. Today's special guest is Joe Cunningham from Worldview Capital. Joe, how are you?
Hey, Ed. Happy Tuesday. Just getting our game on for today. Got the World Cup coming up, so we're looking forward to interrupting our usual flow of our day and watching a little soccer or football.
I watched a little soccer. What was it on Saturday? I watched Holland and who did they play? Holland played.
Who did they play?
Oh wow!
Netherlands.
We got a bad memory here. I can tell we're real soccer fans here.
They played Argentina.
Yeah. And I'll tell you that was a really interesting game. A little better team Argentina than the U.S. when they played Holland, and they kind of dominated Holland for. Although Holland caught up, remember they caught up, it was 2-0. Holland came back and tied it, but Argentina won the penalty kicks. So now we got France.
I hear the U.S. is considering having Bill Belichick as their coach for the 2026 World Cup.
You know, Bill probably would do a hell of a job. You know,
football, it's all the same.
Exactly, it's a ball. You kick the ball. But interesting. You got Croatia and you got Morocco there. Two, teams that have never been in the Final Four. So that's a little interesting, little parity in the World Cup.
Yeah.
And although Morocco, interesting enough, about more than I think 8 of the 11 players are not even from Morocco.
Yeah,
they live in Belgium, France. And there's actually a Canadian, the goaltender Bono from U2.
He's Canadian.
He's a Canadian. He's a Canadian Moroccan. So they got Moroccan in their blood, obviously, if they're on the team. Yeah. But it's funny, only 3 of the starters are actually born in Morocco.
Yeah,
but good for them.
Yeah,
good for them. The coach, first Muslim coach, Islamic coach, to be in the Final Four. So he's must be doing a hell of a job. And
the coach had only been there for 3 months. So
exactly, they fired the other guy.
He's doing something right. But that's
all good. What do we got going on for the market? We have a couple weeks left. You know, we got the Dow 34,000 roughly, the S&P just under 4,000. We talked about your picks for the target for the end of the year.
Yeah,
4,200. About the same as we were last week, is 4,000.
We're feeling good. Obviously, we're doing this a little bit early, but we've got the CPI out today. We're looking at that moderating down to say 0.3 for the month, 7.3 on an annualized basis. They got the Fed meeting on Wednesday. They're going to probably bump rates. Well, they pretty much told us they're going to bump rates by another 50 basis points. So, it's just going to be a busy time. And that really leads into what's going to happen next year. It's going to be a busy time in the credit markets. What we expect to see, and look, 2022, God bless it. Goodbye. Right. We're happy to see it go. I mean, some of the indices that we look at, they're down at historic levels. And everything's down. You know, treasuries are down, stocks are down, crypto's down, housing's down. It's just been a bloody year. Usually there's a safe haven somewhere. And this year we haven't seen it. We've seen a little bit in commodities, but commodities have run up mainly because of war. So even the silver lining has got a very dark shadow. So we're hopeful going into the new year that we're starting to see some momentum indicators. The emerging markets look favorable. They were up 11% last month. 11% is a big move in a month for a sector like the emerging markets. But really, we see a rebound in the treasuries. And we think that, for your clients and those people that are on, say, a fixed income diet, now it's not a bad time to lock in some yields. We do think that in the first half of the year, we're going to see a rally in the medium part of the yield curve. We're still going to see the Fed funds rate going up, right? And we'll see that inversion, but we'll have an opportunity for that inversion to shift as the year goes on. So that inversion could be, 100, 125, 150 basis points even. between the 2-year and the 10-year. And that could last for a good 6 months or so. If the Fed starts to taper off in March or April or May, which we think they will, then that inversion will slowly start to right itself. And so the front end of the curve will settle in, a little bit lower, say 3%. The middle of the part of the curve will start to take on a more left to right upward sloping profile. And those who are in that middle of the curve, you would have an opportunity to gain some profit on a fairly risk-free trade, right? Because as its rates go up in the middle of the curve, obviously the price will come down. So you would have a chance to sell that off. But so we're we think that's where the play is going to be, is going to be in the bond market. Stocks are going to have to prove themselves in 2023. So what does that mean? That means that earnings expectations are going to be a key element here going forward. We always have those whisper numbers. We have some expectations of what's going to come out on the earnings side of the equation. So it's going to be a battle between the expectations for earnings versus the reality for earnings. And there could be some valuation compression if the expectations are too high and the earnings come in too low. So it will be interesting to see how the market resets itself in 2023, but it will reset itself. It's a new year, and that's, even though it's just a calendar ticking over, it is an opportunity to begin anew. So
interesting. What any sectors you think will be good for the market next year, or you think it's going to be kind of tough going for all equities?
We do think that there's going to be layoffs continue, and they're going to be layoffs. So you can have a blue collar layoff, where they're laying off manufacturing workers. You can have a white collar layoff where they're shedding investment bankers. This is going to be kind of the hipster layoff, where they're getting rid of getting rid of the programmers and the IT people. And I think you're seeing with Tesla how they've been able to shed just scores of people, hundreds of people, and still continue to go on. So that fits with the other aspect in terms of what's interesting, and that's going to be AI. So artificial intelligence, anything associated with AI in 2023 will be a buy. That would be an opportunity to get into those sectors that are automating us into the 21st century. And that's what the AI component can do. So we're looking at anything that's AI related. We think that there's going to be displacement in the technology sector. And what we look at there, we look at revenue growth, right? Expense growth, so SG&A, and then headcount growth. So if those are out of line in any way, so if your revenues are growing at, say, 10% and your SG&A at 15% and your employees at 40%, guess what? They're going to be cutting those employees. They're going to be going. So those are the companies that we're starting to develop a matrix for. And, we have the technologies to do that and to try to identify just, where those soft spots are. Because you can go long, you can go short in these markets. You can do a lot of different things. But that's one of the areas we're looking at. And I feel for the hipsters. I do. I enjoy their IPAs and their sad old bastard music, but this is their time.
Well, you look at Twitter. There's all kinds of layoffs being there, and I think they said the user numbers are actually going up. So I guess the Twitter operates even with half the workers.
Yeah,
so, yeah. There's a lot of AI happening. You got right here in Florida, you get the Bright Line train. They've got AI components on the tracks for looking for anything from an animal to a car going across the track, or a person. You've got just announced in New York City, crime wave. They've got cameras going in all the subways. 13,000 cameras. There's 6,500 subway cars. They'll have two cameras in every car. AI that will go right to the dispatch I guess that's maybe the transit police,
right?
The MTA transit police, but they have AI that can not only find there's a fire or a flood or anything like that, or a stoppage of the train, but also there's AI that can actually see the stimulation of like a fight happening or starting, or people starting to shove, and that will actually alert the authorities as it's happening that you got to issue, not wait for someone to call 5 minutes later.
Yeah.
As it's happening, they will be alerted to that. So there's all kinds of, and in Las Vegas, I think I read something about certain downtowns areas had some crime problems in the last year or two. They've also put AI and cameras to help stem the crime wave there.
All about the algorithm.
You're right. And
where we are using it, we have a company. It's an oncology company, breast cancer. Pretty interesting, actually. It's called TTC Oncology, and it was a preferred company, Princess Diane. I mean, you don't get many opportunities to market something with Princess Diane's name attached to it, but she was a sponsor of a university seat where this thing was developed, right? So this is a Worldview capital company, and that's at the University of Illinois Chicago, which is where she had funded the seat. But
what does the company do?
Well, it does breast cancer research, or it has a biomarker for breast cancer, and it's interesting because like breast cancer is huge, and typically what happens is it can be a function of estrogen, and so their particular solution set calls for overexpressing the estrogen. In other words, instead of killing it off, right? It's like blowing up a balloon. They flood it with more estrogen and the cells pop. And then that's a novel approach. It's not, there's no one else out there doing it. We have the papers, we're through phase 1, we're into phase 2. It's a nice, interesting company for us. So but what we're doing now, we're speaking to some people now about taking those biomarkers and putting them using AI to develop additional biomarkers. And biomarkers are those things that are internal that can point to a problem or an issue or something using a particular drug or technique. And so that's what we're looking at with AI, is whether or not we can formulate new biomarkers to identify other types of cancer and other types of issues going forward. We're just early days now with our discussion group, but they're out there, and the company that they are a public company. I would be remiss to I can't really name them, but there are companies out there doing AI with medical.
AI is everywhere, from trains to planes to drugs to security control to all kinds of things. Hey, Joe, we're going to take a quick break, and we'll be right back. Remember, listeners, any questions at all, you can always feel free to give me a call at 518-255-8854. We'll be right back with Money Nation.
All opinions expressed by Ed Gardner and or his guests on the Money Nation show are solely Ed Gardner's and or his guests' opinions and do not reflect the opinions of Cutter & Company or any of their affiliates. You should not treat any opinion expressed by Ed Gardner and or guests as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of their opinion. Ed Gardner's and his guests' opinions are based on information he considers reliable, but neither Cutter & Company nor affiliates and or subsidies warrant its completeness or accuracy, and it should not be relied upon as such. Always talk to your financial advisor before making such decisions.
Welcome back to Money Nation. Joe, Tesla, little tough day for Tesla here, down 167.
Well, Tesla's going to have, I think, a make or break year in some respects. I do think that deliveries will be at a record, and the company, it's how it manages its cash flow, which is going to be a function of its stock price, right? I mean, but deliveries will be at a record, and its stock, I think revenues as such will be at a record. But its stock, I think, it's just a touchstone for so much right now in the technology space, that if technology starts to move as a sector negatively, then Tesla may end up leading it down. We'll see where it starts to, how things start to play out. Plus, you've got the whole overhang with the Twitter financing for Elon Musk and his position in Tesla, and it will be interesting to see how that dynamic plays out. But just on Twitter, just briefly, I see today they were auctioning off their from the offices, the espresso machines, the lounge chairs, the foosball tables, the massage tables, all the perks.
All the good stuff's got to go. Elon doesn't want any of that stuff in that building.
It's gone. You know, he's putting, you know, some army cots in there for him, I guess. But
well, did you see they caught him people bunking down in the headquarters in San Francisco? And you know, San Francisco's got homeless problems galore. It's just a complete hellhole.
Yep.
And the authorities in San Francisco, the best thing they can do, they're gonna bust on Elon for having people sleeping in a cot at work. And those politicians they're the worst on the planet. I'm telling you, that's the best thing they got to complain about is someone sleeping overnight in the office. Really? Exactly. Seriously? That's the best thing you got? Those people have got nothing. They're just pathetic. But
so I thought we might also just touch on, you know, we do see there's so many different streaming services out there these days. And we do think that we're going to see some consolidation in the streaming space over 2023. I mean, I don't know how many you subscribe to. I don't even know how many I subscribe to.
That's a moving number.
Yeah, it is, especially with the kids, and you know, then it just gets a little bit nuts. But we do think that, you know, those standalone streaming services, the Hulus, for example, I'm not picking on them in particular, but they're ripe for consolidation. And I think we'll see fewer streaming services going forward, but we'll have a better quality product. And you know, look, streaming has been fantastic, and we all love Yellowstone and, you know, some of the other shows that are out there for sure. I don't know if you're watching that one. That's a good one though.
I've watched parts of it, and Netflix and Prime, and
of course,
you know, you've got you know, the cable bills get big. I mean, they seem to grow. You start out with your cable and you're at 100. The next thing you know, that's with your Wi-Fi. Next thing you know, you're at 200, and then you're at 250, and then people start going. I mean, my kids wouldn't even use cable. They only stream. No cable, no Spectrum, no Charter, no cable at all. But other people with cable, is they get the 200, 250, and they just swap over to the other one. You know, and upstate New York, for example, you'd go from Spectrum back to Verizon cable. And then when that goes up to 200, you get rid of your Verizon and you go back to Spectrum.
Right.
It's kind of a
little game.
Things that people keep going back for. And then eventually some people get tired of them at all, and then they'll just completely go streaming. But you know, then you're paying all these different $8, $10 subscriptions for that. Probably the best thing is not to watch any TV at all, Joe, and just read a book.
I don't watch news. I'll say this much. I do read my news, so that you know, obviates having to have the cable news of Fox or CNN or whatever your preference is. I get Bloomberg on my TV. That's you know, for the financial stuff, that's pretty handy. But for me, I'm still a book reader. So I'm sticking to it too. I'm gonna
exactly
drawing a line in the sand.
And there's plenty of business news you get on the internet as well.
Yeah,
not too much on the TV.
So one thing I do think is worth mentioning, Ed, because I know we're got a little bit of time issues, but the you know, the pivot that China is making on the COVID right now could reignite global growth. Believe it or not, I mean, it is that big of a pivot. They have a 10-point plan. It's rather elaborate, but they are back in business and looking to engage. Now, we said previously on your show that, you know, the U.S. and China need to have a better relationship. I think this will start to ferment itself in 2023, and we can get into a more positive relationship with China globally in terms of trade in particular. And China, you know, could be back as buyers of U.S. securities and buyers of our exported goods, as well as us buying their goods. And we would have an improved two-way trade flow with the Chinese. And I think that's really what we always wanted. Having a trade war was probably not the best idea, although somebody needed to kind of punch China in the nose. And I think Trump certainly did that. But now let's get to a more constructive place in that relationship. It's a key global relationship for the U.S. and we should be welcoming China's overtures in this respect, and hopefully we will, and we'll be back to a better two-way trade dynamic with the Chinese. So this could be a year where China-related stocks become an interesting opportunity for investors and overseas in general. I mean, we still look at the MSCI, the Morgan Stanley index for global stocks, 45 countries, and it's still pretty ugly. I mean, I have algorithms that follow it, and they're just not there yet. So I can't come on and I can speak to each individual countries, but they're just not. We have it. We're still an island unto ourselves. We have a pretty good thing going here in the United States, where Europe and Asia are still going a little bit sideways. Some of the emerging market countries, Thailand, they're flashing red on in terms of their debt, their trade, their trade balances, and their current balance, which is a technical term. Those can be problematic in 2023, and that could be a potential issue. Because we're always looking for the next issue, right? What's going to blow up the markets? Well, those emerging market debt, which I know a thing or two about. I've been through a couple of those crises, the Russia and the Asian crisis before when I was in Singapore. That could be a potential issue in 2023. So we want to keep an eye on that.
Yep. There's going to be a little crypto hearings. Our FTX, SBF, Sam Bankman-Fried is going to testify, but he's not coming here. No way is he coming here. He's going to do it by Zoom.
Oh, yeah.
So,
no doubt. Yeah.
There was some legal people, lawyers, talking about him coming to the U.S. and testifying for Congress, and they were saying, no, that's probably not a good idea. You'd probably be arrested the minute you step foot in this country.
I would think so.
We do have an extradition treaty with Bahamas, which actually was just finalized in like February of 2022. Before that, right? There was no extradition. That's what I've read.
That might have explained why he was there in the first place. Right.
That's right. He got there, and then they changed the rule when he was there, and now he can be extradited. I've read somewhere, or someone told me they're saying, why doesn't he go to Dubai, where the girl she took off? I guess the Caroline is partner.
Is that where she's at?
Supposedly she was in Hong Kong and trying to get to Dubai. There, people were guessing or thinking he may try to do that, but someone else said the Bahamian authorities are watching him now. He's going nowhere. Yeah. I'm sure the U.S. people are talking to them, and he's not hopping on any plane going anywhere. Yeah. So, but with that said, even this reported by CNBC, they're not going to just arrest him right off the bat. They're going to try to get their case, look at their evidence, take it slowly, make sure they do everything right, cross their T's, dot their I's. But you'd have to think commingling of funds, even though that's an unregulated industry.
Yeah.
Still, things you've been doing were completely illegal. And you'd think that he's
zero corporate control. Zero corporate control.
Yeah, if not criminally, he will be sued beyond belief civilly. But I think criminally he's going to have a big problem. Big problem.
No, I think so. And I think his parents should be adjoined to that suit. I mean, they're
Stanford professors dealing with the attorneys, and I think they had something to do with compliance, or they were compliance lawyers of some kind.
Exactly.
How in the world could he claim ignorance when his parents teach the book on Stanford, the lawyers' compliance? And it's just completely crazy.
You can't make that stuff up, right? You can't make it up.
How do you take $8 billion in one company, just loan it out to the other company, and personal loans of like $1 billion to people that he worked with? I mean, they took money to buy real estate. They did all kinds of things. And then this money just disappeared. They just don't know where it is. And I think it's probably a lot of trading losses from their little hedge fund there that was just bleeding. And I don't understand. They were the experts on crypto. They were the experts on trading. How do you lose billions of dollars when you are? They're basically the market maker, just like specialist firms on the floor of the New York Stock Exchange. They see the buys, they see the sells, they see the order flow. Typically, if you're a specialist, you got a good idea which way the stock's going to go at least that day, or maybe a day or two. But you can see the orders now. FTX is an exchange. Not sure why their hedge fund lost billions and billions and billions of dollars. Not maybe because the people working there.
Well, we
but it's absolutely mind-boggling. It's one of the biggest. It's the biggest loss of a trade. It's the worst trade ever. I think nominal dollars, it's 50 billion. It's worse than Madoff or a couple of the other big trades, long-term capital, a couple other ones. There was a list of the 5 worst trades ever. He is the worst trade ever. Nominal dollars, 50 billion lost. That's quite a record. He said today he wants to start a new business, by the way. He's going to pay everyone back.
Yeah,
good luck with that. Joe, good talking to you. Any parting words?
Yeah, no, I just want to wish everybody a happy holidays as we get going here. We're kind of getting into it. Kids are coming back. Everybody's happy. Weather's going to cooperate. We're going to have a white Christmas here in Minnesota. It's going to be cold, but that's okay. And my our new game for the year, Ed, is snow mitten. I'm putting up the badminton court in the backyard for the winter, so we'll play in the snow mitten.
Nice. So you shovel your badminton court and you get out there. No, we do not.
You better have some boots.
You don't shovel.
No.
You have boots. Well, how much snow you trudging through? Like 3 inches, 6 inches, a foot?
Well, it is what it is. Right now we got about 6 inches, but if it's a foot, it's a foot. I get a fire.
How do you have your lines? Listen, I play badminton. I used to love badminton. How do you have your lines so you know if the ball's in the birdie is in there?
Yeah, we put stakes. It's a judgment call. It's a friendly. These are friendly match. We have people over here. We'll have 15, 20 people over playing.
Wow.
But I have these birdies that have LED lights in them, so we play at night. And
wow, quite the spectacular.
It's great. I'll send you a picture.
Winter badminton at the Cunninghams in Minneapolis.
That's how we roll.
Happy holidays, my friend. I'll be talking to you soon. Thanks, listeners, for listening to Money Nation. Again, any questions, always feel free to call me at 518-255-8854. Thanks, everyone, for listening to Money Nation. Have a good day.
Thanks, Ed.